Hey, did you hear the great news? The United States is now at 137% debt to GDP ratio, which means that for every dollar that it produces, it has $1.37 of debt, which is obviously a really bad thing because anytime you're consuming more than you're producing, it's not sustainable, especially when you're having quantum leaps in the amount of debt that you're taking on relative to the amount of production that you have. You can see from 2012, we were at a 1-to-1 ratio. Now we're at 137% of GDP we now have in debt. And the even crazier thing is the amount of money that we've been printing over the past few years. We've increased money supply over 40% in the United States just in the last few years. What does that cause? Massive inflation rates. Most people never even look up this data to understand what's happening. This debases the value of your currency, right? So if you're holding the US dollar, well, now when you go buy goods and services, it costs a lot more. And that's exactly what we've been seeing with inflation rates. So we're at a 40-year high at 9.1% right now of inflation. But to be honest, the CPI is not even accurate in my opinion because they include things like museum tickets, the cost of milk, and the cost of a funeral, right? And it's just a big basket of goods that few people get together and decide, all right, this is what we're counting for inflation. But if you actually go look into other important things, like, I don't know, maybe energy, how much does it cost for people to move around the world? How much does it cost for goods and services to then, get what they need to different locations? Well, energy is actually at a 41% inflation rate. And there's actually multiple classes of different goods and services that are well over 50% inflation rates, which is absolutely insane. And the reason why that's happening is primarily there's some supply chain things that are also occurring right now, but primarily, it's the amount of money that we've been printing since coming off of the gold standard in the 1970s. So everyone's looking at the stock market saying, oh, wow, we are hitting all-time highs. Look how exponential this growth has been since the 1980s. Well, what I'm about to show you is probably should be really shocking, to be honest, because most people never even think about this simple fact that what we're looking at is the S&P 500, which is the largest 500 companies inside the United States, right? And it's denominated in US dollars. Okay. So when we devalue the US dollar, it makes it easier for that asset to gain momentum and actually appreciate because the denominator is going down. So if we actually valued the S&P 500, but took out the amount of money that we've been printing, or at least, valued it correctly based on the proportion of money that we've been printing over the past 50 years, what would this chart actually look like? Well, here's what it looks like. This. Okay, you can see since the 1970s, we've actually been trending upward slightly. We had a massive move during the tech bubble in 2000, right, where the stock market was massively overvalued. And this included, this is US stocks divided by the M2 money supply, which is what we were just looking at here. All right. And you can see from then, we've just had a downtrend since then. And even though if we look at the 2000s, right at, May of 2000 at the very peak, we're at 1,500 in the S&P. And now we're at 3,945. And if you actually account for the money that we printed, right, the debasement of our currency, now we're well below the highs of the early 2000s. So again, hey, is the stock market actually going up, or is the value of our currency actually just going down? You let me know in the comments section below. I want to point out one other thing too, that, where we're at in the stock market right now, it's only 12% from where we were at in the pandemic lows. So if we actually look at the pandemic lows right here, so I'll tell you how big of a difference this is. 12% when you account for the debasement, but really it's like a 78% move from the bottom, but we need to actually pull from the other way. So we'll go to the bottom. It's a 44% difference. So we're talking about a 32% difference because, again, the 40% increase in the money supply that we've had over the past few years. So that's what people aren't thinking about is, okay, are stocks actually going up right now because they're more valuable? These companies are more valuable, or are stocks and other assets going up because the US dollar is going down in value? This is why the wealthier get wealthier and the gap grows, right? The gap between the poor and middle class grows and deepens over time because the wealthy people understand I have to invest my money somewhere that actually can account for or can outperform the devalue and debasement of the currency that I'm holding. So, the poor middle class, they just sit in cash. And guess what happens? They get crushed over time because of this, because of all the money printing. And they don't understand this simple fact, which is, if you go here, we're at 30.5 trillion in national debt up here, if you guys didn't know. And then if you look at the M2 money supply, right, we had like this is like a 4.3x from early 2000 to where we're at now. So we're at 4.8 trillion. Now we're at 20 trillion, which is just mind boggling. So understand what is happening to your currency, understand what is happening in real time. And by the way, this is not just in the US, this is in multiple other countries as well. Actually, the US is one of the least worst. If you look at other countries, like there's some intense inflation. Turkey's at 78%, and this is just in the G20. If we looked at the world, we got some countries that are just insane, the amount of inflation they have right now. It is absolutely astonishing. Let's go to, we've got Lebanon at 211%, Zimbabwe at 192%, Sudan at 149%, Iran at 52%. Can you imagine losing 52% of the value of your currency in 1 year because the government just simply cannot stop printing so much money, and because of other things that are uncontrollable, like supply chain issues? This is why I really believe that while it may not happen instantly tomorrow, I think over time, we're going to see commodities, specifically precious metals and commodities like Bitcoin, explode in value because people understand, I have to get out of these fiat currencies because they're just going to continue to debase. And the only way to actually protect all the value that you're working for, likely, the majority of your life, is to buy scarce assets that are likely to outpace the rate of inflation. All right. If you got value from this video, let me know in the comment section below. Really curious as to what you think about that chart, because when I saw this the other day, it blew my mind. And if you don't believe me, go to macromicro.me is what it is. And you can look up this chart for yourself. All right. Let me know what you think about this chart in the comment section below. Are stocks really going up? Are asset prices really going up? Or is the value of the US dollar that these assets are denominating going down? All right. Thanks so much for watching. I'll see you here on this next video.